What's up, everyone? My name is Ali. Welcome back to my world of stocks. Now, as you guys know, Alibaba stock has really been a complete disaster in recent years, with the stock crashing by unbelievable amounts. However, in today's video, I'm breaking down 5 great reasons for why it can still recover long term and why I choose to be an investor myself. Before we start though, I just need to ask you guys for one quick favor. One of my best friends just started his own YouTube channel for golfing. It's called Crusader. It's my friend Jeff. He's one of the nicest people you'll ever meet, and he's also an amazing golfer and a great teacher. So if you get a chance, please check out his channel, Instagram, and or TikTok to help him get started with some followers. All the links are in the description below, and tell him that Allah sent you, because I think that would make him really happy to see too. By the way, his videos are awesome, whether you're a beginner who just started looking into golf or is thinking about it, or you're already an experienced player looking to take your game to the next level. You gotta check out Crusader. You won't regret it. And thank you again so much for that support, my friends. It means a lot to both me and Jeff. Thank you for that. All right, coming back here to Alibaba stock. Now, guys, this is a pretty high risk one here, not just for being a Chinese company with a VIE structure that leaves very little shareholder rights to foreign investors like myself, but the company has also been going through some major struggles and changes both within their business as well as macroeconomically. And yet, I still believe that there's a light at the end of the tunnel for Baba stock. And here's why. Now, reason number one, Alibaba has an incredibly strong business that is worth investing in. In fact, they're not only the largest e-commerce company in China, but by gross merchandise value, they're actually the largest in the entire world, even ahead of the almighty Amazon at around double the percentage. And if you think that's crazy, well, just look at the top individual online marketplaces. You see those two platforms there that are actually ahead of Amazon? Well, guess what? Both of those are actually owned by Alibaba. How crazy is that? And of course, Alibaba also leads in cloud computing in Asia. They have an expanding global presence in both e-commerce and cloud, and they do a ton of other things too, including a lot of work in artificial intelligence, even generative AI, which has of course been all the buzz lately too. As a result though, this is a company here that did almost 1 trillion Chinese yuan just last year alone, with close to 200 billion of that going straight to operating cash flow and over 100.5 billion still going to free cash flow as well. And yet the stock has actually been pummeled recently, which brings me to reason number two, the incredibly cheap valuation. Now, there are several good reasons for that crash, namely a slowdown in growth, tightening regulations in China, a horrible macroeconomic environment with rising interest rates, and even the threat of Chinese stocks getting delisted from the US, which I'll comment more on all of these things in just a second. But from the top, we have now seen Alibaba stock crash into the ground, not only losing close to 80% of its entire value, but it's also at one of the lowest prices that we've seen in its entire history. I mean, how crazy is it that we can essentially buy Alibaba stock today at about the same price they IPO'd at many years ago, despite all the amazing growth that they've had since then and how giant and dominant they've become over the years. It's really unbelievable. And as a result, the valuation is now dirt cheap. We're talking about a forward P ratio here that is over 46% cheaper than the sector and over 50% cheaper than their own 5-year average as well, with also a PEG ratio that is another 56% cheaper than the sector too. Guys, at a PE of only 8 and a PEG of less than 0.7 for one of the largest, most dominant companies in the entire world is pretty freaking crazy. And oh, by the way, it also comes now with a pretty nice little dividend too of 1.3%, just in case that wasn't enough value for you as it is. Anyway, this also brings me to reason number 3 now, which is their turnaround potential, as Alibaba has been doing everything it can to get back on track. I mean, they've even gone as far as to separate the company into smaller entities so that they can not only run more efficiently, kind of individually and focus on their own individual needs to bring about more growth in the future, but also to help alleviate some of that regulatory pressure that they were facing in China, being accused of running a sort of like giant monopoly. But take their logistics business, for example. Now that it's a separate entity, it has the freedom to work with competitor e commerce platforms all around the world and grow larger because of it, which is already showing some great promise. In fact, over the past 3 quarters, we saw their international e commerce and logistics businesses grow by huge rates of 46% and 27%, respectively. That's a big deal considering their slowdown in overall growth, which, by the way, seems to be recovering now, with Alibaba's total sales expected to re-accelerate in growth in each of the next 2 years. Profits have also taken a dive recently, with cash flows much lower today than what they were at the height of the pandemic, but I would also argue that those are very difficult years to compare to, and so moving forward we should see improvements there as well. For example, their logistics business became profitable for the first time ever this past year and has already grown to more than half the profits of their massive cloud business, which we all know how profitable that can be because, we see it all the time with Amazon, which is by far their biggest profit driver. And I think over time, these other businesses that Alibaba owns will continue to grow and expand too, especially internationally, where I think they need to look for more long-term growth, which leads me to reason number 4, and that's just how massively large these individual markets are for Alibaba, where they have already established and growing presences in too. Logistics, for example, is already worth many trillions of dollars worldwide. The same goes for e-commerce, which, by the way, is projected to surpass 18 trillion by 2030. And by the way, the Chinese e-commerce market is already close to 3 times the size of the American market, who's in second place, which Alibaba happens to already control about half of their entire market too, just on their own. But there's also cloud computing, which is projected to be worth trillions in the future as well, with the most growth, by the way, coming from the Asia Pacific region, which, oh yeah, Alibaba happens to dominate that market as well. And even other areas like artificial intelligence are gigantic too. PwC, for example, they just estimated in their newest AI research report that it could contribute as much as $15 trillion to the global economy by 2030, which is more than the current output of both China and India combined. I mean, shoot, even just generative AI alone is also expected to be $1 trillion market as well. So the sky is really the limit here in terms of how much opportunity is still out there, especially worldwide. But of course, Alibaba's recovery is still extremely dependent on China, which brings me to reason number 5. And that's that I believe China itself will also recover long-term too, which, I know it's a major concern for many investors, and for good reason, for sure, as China's GDP growth has been heavily trending downwards for years, with all kinds of macroeconomic issues plaguing the country in what has very likely been a recession, despite the communist government insisting that there isn't one taking place. And I think a lot of the people that live there would disagree with that. However, if you truly believe that China is just going to disappear from the world stage and never recover, when they so clearly want to become the biggest economic powerhouse at all costs, I just think that you're not being very realistic there. Now, granted, if the US and China were to go to war or some other horrible, almost like world-ending event occurs, then yeah, China will crash even more and likely never recover. But that just doesn't seem very likely to me, as more recently, we've actually seen more cooperation take place between the two countries than you might think. For example, China has opened up their companies to US regulators at a very fast rate over the past couple years to avoid being delisted from US exchanges. On top of that, the pandemic seems to be mostly behind us, with China not only pumping huge stimulus into the economy, into their own economy, but even into their own stock markets in an effort to kickstart a recovery there too. And I'm not necessarily saying that these actions will be a huge success, but it should be noted that we've seen many large hedge funds start buying Chinese stocks at a record pace this year, which makes me think that there may be more value here and opportunity than investors might realize. Even Alibaba themselves have repurchased their own stock at the second highest rate in history last quarter, and went as far as to increase their share buyback program by $25 billion through 2027, with several insiders also buying up a ton of the stock too at the same time. Again, time will tell how all of this ultimately plays out, and like I said at the start of the video, this is still a very high risk stock here that most people should probably stay away from because they really don't know how to properly handle this much risk in the stock market. But as for me, I know how to balance it out with much more high quality stocks that make up the vast majority of my portfolio. And then with just a small piece of it, I do speculate a little on some of these other riskier bets, but I do so slowly, cautiously, and in small amounts to minimize my risk. And when I see a stock like Alibaba trade this incredibly cheap, I just feel that it's worth the risk. But what do you all think? I would love to hear your thoughts down below. Do you agree with any of the points I made today? Do you disagree with anything? Let me know down there. And are you investing in Alibaba stock, or is it a one that you're staying away from, or maybe you're even shorting it? I'd love to hear all views and opinions in this video on this channel, so drop them down there. But thanks again for stopping by, my friends. I hope that you're all doing well, and I will catch you in the next video. All right, take care, everybody. Bye-bye.